Okay. New section now. Pay attention. 45.1 is done. 45.2 done. Now 45.5. But before 45.5, one small concept. See, you have a capital asset. That capital asset is converted into, and then later on you sell stock in trade. Yes or no? Stock in trade is sold. Okay, no? Appreciation from here to here. This entire appreciation. Taxable under which head? Capital gain. Appreciation from this to this. Taxable under the head? Which head? PGBP, no? What happened? Bring it ahead, no? Possible. Shift a little bit this. That's it. Now okay? Study, huh? So, to do this thing, to charge this gain under capital gain head and to charge under PGBP. Do you know there is this fair market value as on date of conversion. So this fair market value as on the date of conversion. What do you consider this? To calculate capital gain, this will be treated as under section 45(2), and this same fair market value is treated as cost of stock in trade. This is something which you have already done, no? This was under section 45(2). Now I'll ask you something. You have stock in trade. Now you have. Can you convert your stock in trade into capital asset? Instead of capital asset converted into stock in trade, now can your stock in trade be converted into capital asset? And later on that capital asset is transferred. So there will be appreciation in this period. There will be appreciation in this period also. So any appreciation in this period will be taxable under which head? PGBP. Because this was the period for which you were holding a stock in trade. And any appreciation in this period should be taxable under the head capital gain, no? So for that, do you know, as on the date of conversion, the fair market value will be there? As on date of, now that fair market value as on the date of conversion of your stock in trade into capital asset, yes or no? Here it will be treated as sale value. This will be treated as your PGBP income. PGBP income as per section 28 specific charge, which I did not tell you at the time of PGBP. Do you remember PGBP? Two types of charge: general charge, specific charge. In specific charge, I left one income that I will do it with section 45(2) under the head capital gain. This was that income. So fair market value of your inventory, fair market value of your stock in trade as on the date of conversion into capital asset. That fair market value will be taxable under the head PGBP as your income. As your income. So even though the stock in trade is not sold right now, in the year of conversion, this will be treated as your income. In the year of conversion itself. We are not going to wait for this gain to be realized. See, earlier both the gains were taxable in which year? The year in which the stock in trade is sold. So in the year in which the stock in trades will be sold, in that year this appreciation will be taxable and also this appreciation will be taxable because it is realized in that year. Yes or no? But here no, here in this case, this appreciation will be taxed in the year of conversion itself. We are not going to wait for capital asset to be transferred because actually this appreciation will be realized when the capital asset will be transferred. So stock in trade converted into capital asset. Whatever appreciation is happening will be realized when the capital asset will be transferred. Yes or no? But when it will be transferred? Now that the asset has become what? Capital asset, there is no guarantee that this capital asset will be transferred soon. It might be transferred after 2 years also, it might be transferred after 5 years also, it might be transferred after 10 years, 50 years also. It might not be transferred only. So till the time capital asset is not transferred, we will not be able to charge this amount under the head PGBP. So we are not going to wait for the capital asset to be transferred. No. In the year of conversion itself, the entire fair market value will be treated as your business income, so that this appreciation gets taxed in the year of conversion itself. Now any appreciation after this, only this much appreciation will be taxable at the time when the capital asset is transferred. So to do that, this fair market value will now be treated as your cost of acquisition of your capital asset. And this is given under section 49(9). So there is one section 49(9) which says that you acquired your capital asset. Usually whenever you acquire your capital asset, what is the cost? Actual cost. But did you acquire your capital asset? No. This capital asset became your property on conversion of stock in trade into capital asset. So this is not the normal way in which you have bought the capital asset. No. The time when you bought it as a stock in trade, and on conversion of stock in trade, this capital asset became your property. So such type of capital asset, whenever transferred, their cost will be the fair market value as on the date of conversion. So whenever this capital asset will now be sold in the future, transferred in the future, at that time the capital gain needs to be calculated. To calculate that capital gains, what will be the cost of acquisition of this capital asset? Fair market value as on the date of conversion as per 49(9) will be deemed to be the cost of acquisition of your capital asset. Usually cost of acquisition is what? Actual cost. For some asset it is already defined, but in some cases there will be a deemed cost of acquisition also. You cannot take the amount of stock in trade, the cost of acquisition of stock in trade, you cannot take as cost of your capital asset, because if you take that, the appreciation which is already taxed under the head PGBP on conversion will again be taxed as your capital gain. You want to do that? No. So don't take the cost of your stock in trade as cost of capital asset, because whatever appreciation is taking place from this date to this date, this entire appreciation is getting taxable under the head PGBP in the year of conversion, because this fair market value as on the date of conversion is already treated as your income as per section 28 in the year of. So this fair market value minus the cost, this appreciation is already taxed here. Now you just have to charge the appreciation starting from this date to this date. Only this appreciation needs to be charged under the head capital gain, and this will be taxable in the year in which the capital asset is transferred. So for example, if I say my stock in trade I acquired for 100, I acquired a stock in trade. For example, I acquired some shares. In my share trading business. So in my share trading business, the shares are acquired as stock in trade. What was the cost of my shares as a stock in trade? 100 rupees. Now I am closing my business. I don't want to continue this business anymore. So now whatever shares, whatever stock in trade was there with me, that entire stock in trade, now I will convert as my capital asset. Now these shares I will start holding as my capital asset. So at the time when I converted them into capital asset, the fair market value was 180. How much? So 100 to 180, there is an appreciation of 80 rupees. It will already be taxed under the head PGBP, because this 180 will be taxable as per section 28 under section 28 under the head PGBP in the year of conversion. For example, the conversion is taking place on 9/9/2024. When the conversion is taking place? 9/9/24, meaning 24/25 only. In the year 24/25 only, I will take PGBP income of 180, fair market value as my PGBP income, minus the cost of stock in trade, 100. That means that 80 will be taxable under the head PGBP in the year 24/25 itself. Getting my point? We are not going to wait that when you are realizing this 80 at the time of sale of capital asset, that time we will charge. No, because we don't know, not even you are knowing that when are you going to sell this asset as a capital asset in the future. Maybe you are not selling it only, then this 80 will never be charged to tax. So let us charge this 80 right now only in the year of conversion. Now at the time of conversion, the value was 180. Now these shares in the future you are selling as capital asset. So whenever you will sell, you are, for example, selling it for 250. So you are selling the shares for 250. Now what are you selling? Shares as a capital asset. So you are transferring capital asset. For how much? So you are transferring it in 25/26. So in 25/26 you are going to calculate your capital gain. So this capital gain is on transfer of a capital asset which you did not acquire as a capital asset. This capital asset became your property on conversion of stock, for which the fair market value was already taxed under the head PGBP. Now in 25/26 when you will calculate your capital gain, in 25/26 when you will calculate your capital gain on transfer of this capital asset, what will be the full value of consideration? 250. Selling price at which you have transferred your capital asset, 250 minus transfer expense. Net consideration 250 minus cost. What are you going to take? Are you going to take 100 rupees? If you take that 100 rupees, what will happen? That 80 which is already taxed under the head PGBP will be taxed again in the form of capital gain. You want to pay tax on that again under the head capital gains? No? Then take 180 only as a cost. As per 49.9. As per 49.9. This 180 which is the fair market value will be deemed to be your cost of acquisition of this capital asset, this type of capital asset. Yes or no? Now tell me, 180 you will reduce. So can I say appreciation from 180 to 250? 70 rupees appreciation will be taxable under the head capital gain. So total gain is how much? An asset which was having 100 rupees cost is sold for 250. Yes or no? How much is the total gain? 150. Out of that 150 gain, 80 rupees will be taxed right now only in the year of conversion under the head PGBP. But to do that, the fair market value will be treated as your PGBP income, specific charge. Yes or no? And the 70 rupees, remaining 70 rupees will be taxable in the year of transfer of your capital asset. But to do that, this same fair market value will now be treated as your cost of acquisition. Understood? This will be taxable in which year? In the year of transfer of capital asset. And this will be taxable in which year? This gain will be taxable in which year? In the year of conversion itself. But to do that, this fair market value will be treated as your income as per specific charge given under section 28 in the year of conversion itself. Yes or no? Should I move? Perfect. But tell me, what will be the period of holding of this capital asset? From which date the period of holding will start? This date, no? This date, no? So you started holding the asset as a capital asset from the date of conversion. So your period of holding of this type of capital asset will start from date of conversion and it will end on date immediately preceding to date of transfer. So this will be the period of holding. And if this period of holding you are seeing and you come to know that the asset is short term, cost of acquisition will be this much only, yes or no? Will be without indexation. Any cost of improvement is incurred within this period will also be allowed while calculating the capital gains. Will you remember, sir? Sure or no? And wait, will you do the indexation? What if you see this period and you come to know that the asset is a long-term asset? Will you do any indexation? No. Why? Because the transfer is made in 25-26 on or after 23rd July 2024. No indexation will be done. But wait. If this capital asset was transferred prior to 23rd July, meaning for 250 it is transferred on 19th of May 2024, meaning are you transferring prior to 23rd July? In that case, what did I say? In that case, if it was a long-term asset, then we would have taken the indexation also. So you always check the date of transfer. If that date of transfer is on or after 23rd July 2024, will not take any indexation. Majority of the cases it will not come only. Okay, no? Because in the question exam, they are going to ask you a question. In that question, they are going to tell you that assessee has transferred the asset in 25-26. Meaning, on or after 23rd July 2024, you are not supposed to take any indexation. But in some cases, the indexation can also come. That we have already seen. 45(1)(a), 45(2), yes or no? So in some cases, we have already seen. Indexation might come while calculating the capital gain. What if the capital asset was damaged or destroyed prior to 23rd July 24? Meaning transfer is made prior to 23rd July 24. Yes or no? And on that, indexation will be there. What if the capital asset is converted into stock in trade prior to 23rd July 24? Then also in that case, the indexation might come. What if this capital asset was converted into 21-22? Converted into? So PGBP income was already taxed under, income, this fair market value was already taxed in 21-22. Yes or no? No need to charge it right now because this is not the year of conversion. Year of conversion was 21-22. In that year only this fair market value is already taxed under the head PGBP. Now for example, if this capital asset is transferred on 9/9/2023, meaning prior to 23rd July. So 21-22 conversion took place. From there the period of holding will start and it will be till 9/9/2023, and the period of holding for example is more than 24 months. Asset is long term, and if asset is long term and the transfer is made prior to 23rd July, we'll have to index the cost also. And what is the cost? What is the cost of this asset? Fair market value as on the date of conversion will be taken as your cost of acquisition. Then we might have to index that also. But what if conversion took place in 21-22, yes or no? And the asset was transferred in 25-26, today. Capital gain will be calculated today and will be taxable today because the transfer is made today. 25-26, yes or no? And in that case, even if the asset is long-term asset, no need to take any indexation because the capital asset is transferred on or after 23rd July 2024. Will you remember this? So this was the end of your section 45-2. But before moving ahead, let's solve few questions from ICI study mat. Come to ICI study mat. Test your knowledge. You have test your knowledge? Question number 2. Question number 2. Start. Do it fast, huh? Difficult problems we have solved. This is easier one. CII also given. Meaning what? Indexation will be there or will not be there? Not necessary. Sometimes they can give you CII to confuse also. And maybe in this question they might confuse you. Don't forget whatever we have done. By now you should get the answer also. What the answer? How much? 2 lakh? Okay, let's read. Arav converts his plot of land, which was a capital asset, purchased in July 2004 for 80,000 into stock in trade on 31st March 2025. The fair market value as on 31st March 25 was 3 lakh. The stock in trade was sold for 3 lakh 25 in the month of January 26. Find out the taxable income, if any, and if so, under which head of income and for which assessment year. Very easy question. So, plot of land, which was a capital asset. Okay, now acquired in which year? July 2004, meaning previous year 4-5. In the previous year 4-5, it was acquired for how much? So actual cost was 80,000. Any cost of improvement it incurred? No. It was directly converted into So converted on what date? Converted into stock in trade on 31st March 2025, meaning previous year 24-25 it was converted, and as on the date of conversion the fair market value was 3 lakhs. Now after converting it into stock in trade, it was sold. It was sold. The stock in trade is sold on January 26 and it was sold for a selling price of, okay. Now name of the assessee? Arav, no? Mr. Arav. Don't write all these things, huh? This is just the question which I have arranged. That's it. The main solution is this. Arav. Who is he? Individual. If the residential status is not given, we will assume that the assessee is ROR. PAN is dash. Previous year is 25-26. Assessment year is 26-27. Computation of what? Capital gains. Now see, we are computing capital gains and will charge capital gains in which previous year? 25-26, because this is the previous year in which the stock in trade is sold. So write down here, this is the previous year in which stock in trade is sold. So in this previous year only we are going to calculate the PGBP as well as capital gain. Yes or no? So first we are going to calculate what? Taxable income. Under the head PGBP. How much will be that? Selling price of stock in trade, which is 3,25,000 minus cost of your stock in trade, which is nothing but fair market value as on date of conversion, as on 31st March 25. Yes or no? Which was 3 lakhs. Minus, what are you going to get? 25,000. This is your taxable PGBP income. Done, sir? Now, taxable capital gain. Taxable capital gains. So, capital gains will be calculated at that time. The full value of consideration will be how much? The fair market value as on the date of conversion will be 3 lakh rupees. Now this minus transfer expense. Any transfer expense incurred? No. So net consideration will be 3 lakhs. Minus what? Why cost of acquisition? Any cost of improvement, cost of acquisition. Why cost of acquisition? Because the capital asset was acquired in July 2004 and conversion means transfer taking place on 31st March 2025. Meaning on or after 23rd July 2024. So now even if the period of holding is more than 24 months, indexation is not going to come. Yes or no? So less cost of acquisition, less cost of improvement. Acquisition cost was how much? 80,000. Any cost of improvement? So it will be nil. 3 lakh minus 80,000 will give you, this 2,20,000 will be your long-term capital gain taxable under section 112. Yes or no? And your total income for this year will be 25,000 plus 2,20,000 will be 2,45,000. Understood? Easy, difficult? Easy, no? Very good. Please check the answer. Then sir, why this CII and everything is given? Why this is given? To confuse that you take indexation also. Yes or no? But wait. Find out the, okay, and write down also compute tax liability on capital gain only. Not your total tax liability. Also calculate the tax on capital gain. Let's do one thing, no? Calculate the capital gain on the entire amount. No. Calculate only on capital gain. Come on. $27,000. You took 12.5%. Wrong. I would have given you to calculate the tax liability because there is some twist. There is something which you again and again forget. Arav is an individual, resident, transfer of capital asset, meaning conversion, taking place on or after 23rd July 2024, and this immobile property was acquired prior to 23rd July 2024. So capital gain without indexation is 2,20,000. On that you are supposed to pay 12.5%, but you will have to again recompute the gain by taking the indexation, and on that index gain you are supposed to apply 20%. 20% with indexation, 12.5% without indexation, whichever is more beneficial, that you are supposed to pay. Hello? Did you understand? So now tell me here, in my answer, on this tax on LTCG, we have to calculate tax on LTCG under section 112. Yes or no? So first, what is my LTCG without indexation? Tell me, what is my LTCG without indexation? 2,20,000, no? On that the tax will be at the rate of 12.5%, 27,500. Yes or no? This is my tax one. Now, I will calculate the LTCG with indexation also. Now to calculate this LTCG with indexation, I will have to again do the same calculations. This, till here it will be same. Now, will I take cost of acquisition or index cost of acquisition? Index cost of acquisition less index cost of acquisition. For that, cost of acquisition was 80,000. 80,000 into CII. CII of year of transfer. Year of transfer means year of conversion. In which year the conversion is taking place? 31st March 25, meaning 24-25. So CII of 24-25 will be 363 divided by CII of year of acquisition 45. 113. Calculate. 991. Reduce this. Sorry, there is no index cost of improvement. Index cost of improvement will be nil. Now tell me. 43,009. Yes or no? And this is LTCG without indexation. On that, the tax to be calculated at the rate of 20%. So what is the tax? 8,602. Can I say this is my tax 2? This is a tax on your capital gain with indexation. At what rate? 20%. And this is the tax on your capital gain at the rate of 12.5% without indexation. Which tax you are going to pay? With indexation or without indexation? Tax 1, tax 2? Tax 2. So therefore, tax on LTCG is equal to tax 1 or tax 2. whichever is lower, is equal to 8602 plus 4% cess. 8,946. You have to round it off. 8950 rounded off. Done, sir? If they would have told you to calculate the tax would have been calculated like this. Okay, no? Hello, sir? Now, pay attention. Come to the illustrations. Illustration number 1, we have completed, I guess. Illustration number 1. Yes or no? Illustration number 2. Illustration number 2. Come on, let's start. Start. Illustration number 2, you are going to solve. Very difficult question, huh? Don't tell me that you found this question easy. This is very difficult question. Conversion of capital asset into stock in trade will result into capital gains. But conversion of an asset into stock in trade will not result into will not result into capital gain if that asset is not a capital asset only. So what are you converting? You are the owner of a car. This is a car. Car is equal to movable personal effect. Car is a movable personal effect which is not equal to capital asset. On 1st of April 2025, you start a business of buying and selling the cars and you convert this car into your stock in trade. Yes or no? Now you are selling this car as a stock in trade and earning a profit of rupees 1 lakh. What will be the tax implications in the hands of under the head capital gains? No capital gain will arise. Entire 1 lakh will be taxable under the head PGBP. Why capital gain will not arise? Because conversion is not treated as transfer if it is a conversion of any asset other than capital asset. So this is not a capital asset which is getting converted into what? Stock in trade, hence no capital gain will arise. Entire 1 lakh profit will be taxable as your PGBP income. Will you remember this? Question number 2 is done. Come to 3. Start. What the answer? Final answer. So, tell me, acquired the capital asset in which year? 2006-7. For how much? And it was converted into stock in trade on 10th March 2025. Meaning transfer is taking place on or after 23rd July 2024. So period of holding of the capital asset was more than 24 months. Hence the capital asset is a long-term capital asset. Capital gain will be calculated, but that capital gain will be taxable in the year in which the stock in trade is sold and not in the year of conversion. So tell me, the fair market value as on the date of conversion was 5,50,000. He subsequently sells the stock in trade for rupees 6,00,000 on June 10, 2025. If you present this information in a flow, you will come to know capital asset purchased, then it is converted into stock in trade, and then that stock in trade is sold. Okay, no? So tell me, which is the previous year? Previous year 25-26. That is assessment year 26-27. In this year, the stock in trade is sold. Stock in trade is. So in this year, one statement you will prepare or two statements? First statement for PGBP income. To calculate PGBP income, what is the selling price? Minus what is the cost? Fair market value as on the date of conversion. Yes or no? So this entire 50,000 will be taxable as your PGBP. Now to calculate the capital gain, what are you going to do? You will take the same 5,50,000 fair market value as on the date of conversion as your full value of consideration minus transfer expense, which is nil. So your net consideration will be 5,50,000. Out of that, will you reduce cost of acquisition, cost of improvement? Yes. How much was the cost of acquisition? And how much was the cost of improvement? Nil. Calculate. This 4,90,000 will be your long-term gain or short-term gain? Long-term capital gain under section 112. And this will also be taxable. And this will also be taxable in the previous year 25-26. Assessment year 26-27. Because the stock in trade is sold in the year 25-26. Understood? Easy? Why you did not take indexation? Because sir, the conversion is taking place on 10th March 2000 meaning on or after 23rd July 2024. Transfer is on or after transfer is on or after 23rd July 2024. Hence, indexation is not taken. Getting my point? And the capital gain is calculated without indexation. That will be 4,90,000. You will read this answer at home today. But today at home you are going to solve this question in the format in which we do. And in the note you are going to write down that both the incomes, PGBP as well as capital gain, will be taxable in the year 2025-26 because this is the year in which the capital asset is, this is the year in which the stock in trade is sold. Understood? Okay. Now see, come to your test your knowledge again. Test your knowledge. Test your knowledge, question number 3. Mark this question important. And you are not going to read that question after this. Okay, no? Just read the question till this point and compute. Compute what? PGBP income and capital gain income. And trust me, I have a gut feeling this time that this question might come in the exam. Gut feeling, huh? This will definitely come? No, not necessary. But I have a gut feeling. Because this question is there in the ICI study mat since a very long time. Very easy question. But they have twisted the question language in such a way that students should get confused. See, the second part of this same questions, this question has some more part, yes or no? This remaining part of the question now we are going to solve after completing 54 EC tomorrow. So when we'll be doing that 54 EC now, after 54 EC, again we are going to come to this question and we are supposed to read the balance part of the question and we are supposed to do the solution, balance solution, yes or no? But as of now, this is not going to affect our calculation. So right now, you just calculate your PGBP income and capital gain, yes or no, on conversion of capital asset into stock in trade. Do it fast. You see, what is the problem? That you did not understand the question only. First of all, everyone concentrate here. You have land, which is your capital asset. When did you acquire this land? Previous year 2004-05. What was the actual cost? 35 lakhs. So when you will calculate the capital gain of land, that time 35 lakhs will be reduced as cost of acquisition. Any cost of improvements you have done? Here, on this land? No. And you converted your land into stock in trade. Yes or no? So you have converted into stock in trade on what date? On 21st March 2024, meaning previous year 23-24 and also prior to 23rd July 2024. Yes or no? Now, as on the date of conversion, can I say this is your date of conversion, guys? 23rd July 2024. On this date, the fair market value of that land was 210 lakhs. Yes or no? Okay. Now this land you are selling as stock in trade. So sold as stock in trade. Hello? When are you selling? Tell me now, when are you selling? March 2026. So you are selling the land in the month of March 2026. But before selling as a stock in trade, you constructed some flats on this land. So ultimately, the flats which you have constructed on the land are also sold as your stock in trade only, no? So your land which is converted into stock in trade, that is being sold as stock in trade, but on that, the flats are constructed, so the land is being sold along with the constructed flats. Simple. So before selling the land as a stock in trade, you constructed here construction of 15 flats. Construction of 15 flats was done on that same land. Yes or no? So the land which is now your stock in trade, which is being sold as stock in trade, but it is not sold alone. On that 15 flats are constructed, the land is being sold as a stock in trade along with constructed flats. Now, cost of construction, COC, is 10 lakh per flat. Okay, no? And this construction was done in February 2026, if I am not wrong. Done, sir? So in February 2026, you constructed 15 flats. Okay. Cost of construction of each flat was 10 lakh. Now, along with these flats, if the land is sold, hello, then PGBP will also come and capital gain will also come. But what is happening, you know? You are selling what? The land as stock in trade with all 15 flats. No, sir. You are not selling with all 15 flats. You are selling with 10 flats only. Will you transfer your entire stock in trade or part of the stock in trade? So only the PGBP income of that part and only the capital gain of that part will be taxable. If you would have sold the entire land along with all the 15 flats, then PGBP of the entire land with flats would have been calculated, and the capital gain of all the entire land would have been charged. But are you selling your entire land along with all the 15 flats? Or you are selling only the part of the land with 10 flats? So only the capital gain proportionate to that will be taxable, and only the PGBP income of that much land will be taxable. Understanding? So here with 10 flats, you are selling it for in the month of March 2026, and selling price is equal to 30 lakhs per flat. So now this 30 lakh will not be charged for flat only, it will be charged for the land also, which is going as a part of flat. Getting my point? So this is the entire question. Now tell me, which is the previous year? So Harshita is the assessee. Harshita is the assessee. She is an individual ROR. Yes or no? PAN is dash. Which previous year should I write? Previous year of conversion, no? Or previous year of sale of stock in trade? And the previous year of sale of stock in trade is 25-26, because March 26 the stock in trade is sold. Assessment year 26-27. Now in this year, what are you going to do? You are going to do two things. Number one, computation of which income? PGBP income. See, PGBP income I will calculate for 15 flats and the entire land if all the 15 flats are sold. Am I selling all the flats or only 10 flats? So PGBP income of 10 flats and the land occupied by 10 flats will now be calculated right now. Understanding? So to calculate that, what is my selling price of land and building? Land and building means land and flats, which is held by me as a stock in trade. 30 lakhs into 10 flats will be 3 crores. Yes or no? Less cost of land and flat, which is my stock in trade. So what is the cost of land? What is the cost of land? This is, for land I will have to take fair market value as on date of conversion. What was the fair market value? 2 crores. But that I would have reduced if I would have sold all the 15 flats along with the entire land. Am I selling the entire land or only the land proportionate which is occupied by 10 flats? So if this 210 is the fair market value of the entire land, how much should be the fair market value of that land which is occupied by 10 flats? This into 10 divided by 15. Hello. So this into 10 divided by 15, meaning 2 by 3. 2 by 3, yes or no? Will be how much? 1 crore. Everyone got this? Sure. Now, cost of stock in trade. Stock in trade is land also and flats also. So I will have to reduce the cost of flats also, no, to calculate my PGBP income. So what is the cost of flats? Cost of construction. Cost of construction. which is nothing but 10 lakh per flat multiplied by 10 flats, which is how much? 1 crore, 100 lakhs. Done, sir? Reduce this, you are going to get 60 lakhs. This will be your PGBP income. Sir, what about that land and the flat? 5 flats and the land occupied by those 5 flats will be taxable in the year in which those 5 flats will be sold. In that year it will be taxable. Right now in 25-26 only this much land is sold and these flats are sold. So in 25-26 only this much PGBP income will come. And proportionate gain also you are supposed to calculate now. Now the entire capital gain will not be taxable, only the proportionate gain will be taxable. The gain which is related to the land which is getting sold right now as what? Stock in trade. So now you are going to calculate what? Computation of capital gains. Now to compute the capital gains, what will be the full value of consideration? Fair market value as on date of conversion. What was the fair market value? 210 lakhs. But this is the fair market value of that land which is getting converted. But if the entire land would have been sold as stock in trade, yes or no? I would have taken this entire 210 to calculate the capital gain of entire land. Understanding? So I will take only 10 upon 15. The same amount which I have taken as cost to calculate my PGBP income, that same amount will be treated as my full value of consideration. Yes or no? Minus, was there any expenditure incurred on conversion? Land was converted into stock in trade. At the time of conversion, at the time of transfer, any expenditure was incurred? No. So the net consideration will be 1 crore 40 lakhs. This will be my net consideration. Minus cost of acquisition or index cost of acquisition? Why index cost? Because the capital asset was purchased prior to 23rd July 2024 and it is converted, meaning transferred prior to 23rd July 2024. Period of holding is more than 24 months. Hence the asset is long term, and if asset is long term and transferred prior to 23rd July 24, I will do the indexation also. Yes or no? So here the index cost of acquisition will be how much? 35 lakhs. I will have to take 35 lakhs, no? Bloody if I take 35 lakhs, meaning I am reducing the cost of the entire land. Am I calculating the capital gain of entire land? On only the land which is sold with 10 flats. So if I have taken the full value of consideration proportionately, in that same proportion I have to take the cost of acquisition also, no? So cost of acquisition multiplied by 10 by 15. This will be my cost of acquisition of that land which is right now being sold as stock in trade with those 10 flats. Getting my point? Now this I have to index. 35 lakhs into 10 divided by 15. This cost I have to index. So indexation multiplied by CII of year of conversion 24, 25. 24, 25 or 23, 24? 23, 24. So what is the CII of 23, 24? And divided by CII of year of acquisition, meaning 4, 5. 1, 1, 3. So tell me index cost. 841. Yes or no? Index cost of improvement. Any cost of improvement incurred? No. So now calculate the capital gain. 69 lakhs, 68 lakhs, 68 lakh, 14,150. This is my taxable long-term capital gain. Understood? There is one more way in which you can solve this answer. How come? See, pay attention, pay attention. 210 lakhs was the fair market value. Hello? Will be taken as full value of consideration minus transfer expense was how much? Dash. So the net consideration will be 2 crore 10 lakhs. Now index cost of acquisition here will be 35 lakhs into 348 divided by 113. Calculate. 1 crore 7 lakh 760. Reduce this. 1 crore 2 lakh 21,000 230. This is index cost of improvement. Improvement is nothing, no? Now how much is this gain? Tell me. This is the long-term gain of the entire land. If you would have sold all the flats, 15 flats, then this long-term gain would have been taxed. Hello? Have you sold all the flats? So this entire land is not sold. This entire capital gain is not realized. Out of this, how much is realized? 10 by 15. Do the calculation. 14,000. Did you get the same answer? Same answer, no? So first you calculate full capital gain and then also you can do 10 by 15. So can I say balance LTCG? Balance capital gain is how much? Balance capital gain, calculate. Balance capital gain. Out of this, only this capital gain is taxable right now. So out of this, how much is still remaining? 34 lakh 080. This is the balance capital gain. Whenever you will sell your 5 flats, so PGBP income of 5 flats will be calculated. Hello? At that time, this balance capital gain will be taxable at that time. Understanding? So this will be taxable in previous year, in which remaining 5 flats with converted land is sold. So the year in which those 5 flats with converted land will be sold, in that year, this proportionate gain of the land will be taxable in that year. This is not going to be taxed in this year. So out of the total gain which you have calculated, only this much gain will be taxable in this year. Because this is the proportionate gain of that land which is being sold as a stock in trade along with those 10 flats. Got it, sir? Hello? How was this question? Easy? Very easy question. You just had to apply some logic. Otherwise it is a magic. Which happened? Will you remember? So alternate calculation. This is alternate computation. Understanding? Alternate computation of capital gains. Now in this is taxable in Taxable in previous year 25, 26, because 10 flats are sold in 25, 26 along with 10 flats. This will be PGBP income of 10 flats, and this capital gain will be taxable. And this will be taxable in the previous year in which 5 flats will be sold. So what I tell you, instead of making the calculation of your capital gains like this, you should calculate like this. Why? Because it is more elaborate calculation, and here if you are writing this part also it will create a good impact on the examiner. What if in that same question they would have asked how much capital gain will be taxable later on? Then your answer should have been this much. Done, sir? Now what I'll do, I'll keep the balance part, blank here. I'll again come to this solution. Right now, no, later on when we'll do 54 EC, then I'll again come back to this part. Yes or no, sir? So this was your section 45-2. All the questions we have done. Okay. Now let's come to the new section. See. Shrikant or Srinath? Shrikant. S-R-I-K-A-N-T. Shrikant. So this is our assessee, Mr. Shrikant. Shrikant is having a capital asset. For example, he is having a capital asset, any immobile property. Possible or not? When did he acquire this immobile property? Example, he has acquired this immobile property in previous year on 10th of June 2020. Sorry, not 20. Let's keep it 16. Meaning previous year 16-17 he acquired one immobile property. Okay. Now he acquired for an actual cost of rupees 6 lakhs. How much, sir? 6 lakhs. Now this, what happens now? This immobile property was compulsorily acquired by authorities or government on 8th of May 2024. 8th of May 2000 compulsory acquisition under any law. So under any law, this immobile property was compulsorily acquired from him. Authorities came and authorities took away this immobile property from him. Can the authorities do that? Can the authorities do that? Yes, because it is happening under any law. So as per law, the authorities or the government is coming and taking away this property from Shrikant. Tell me, will they give anything to Shrikant? What? Compensation. Compensation will be given to him, no? That Shrikant, this road is very narrow. You have a property on the side of the road, and now the government wants to widen the road. So to widen the road, these properties needs to be demolished, and you are one of the owner of these properties. Okay, no? So to widen the road, we will have to demolish the property. Give your property to us. We'll demolish and we'll widen the road. Yes or no? So if he is not ready to give that property, then he doesn't have any choice. The government will take away that property from him, because this is happening under any law. So the law is giving the right to the authorities or to the government to take away the capital asset from the assessee. Now assessee will ask for a compensation. You become Shrikant and think how much compensation you are going to ask from the government. 6 lakh rupees, no? Ask no 6 lakh. How much you will ask? Bloody, the value of this property, the date on which the compulsory acquisition is taking place, yes or no? As on this date, the fair market value of the property was around 50 lakhs. How much? So will you ask only 6 lakhs? Because I had acquired long back for 6 lakh, give me 6 lakhs. Definitely, the market value of your property will be kept in mind, and considering the market value, the government will compensate you. So the government or the authorities will see that, okay, the market value is near to 50 lakhs, somewhere in the range of 50 lakhs. So let's offer a compensation of 40 lakhs. How much? They will deliberately give you less only. They are never going to give you equal to the market value. Why? Because even if they are going to give you an amount of compensation equal to the market value, still you will not be happy. Still you are going to file a case against the authorities to get the compensation increased. So anyways, the assessee is going to file a case only to get the compensation increased. Why? To give him exact fair market value right now. Authorities or the government are also very smart. They will say, okay, market value is how much? 50, no? We are going to give you 40, we are going to give you 42, somewhere in the range of 40 to 45 they will offer. So how much compensation they are offering? So on compulsory acquisition, initially the compensation agreed. Initial compensation which was fixed. This compensation fixed was rupees 42 lakhs. Let's take an example. The compensation fixed was 42 lakhs. Now tell me, Shrikant is getting any profit? Is there any profit happening on compulsory acquisition? Yes. Bloody, the property whose cost was only 6 lakh is going, and in return how much is coming? Amount is coming more than the cost only. If he would have sold this property for 42 lakhs, he wouldn't have paid tax on the gain? He would have paid tax on the gain, no? Then why not now? Right now also the gain is happening, so this gain should be taxable in his hands, because the compensation which will be given will be definitely higher than cost of the property. Compensation will be given keeping in mind the existing value of the property and not the cost of the property, because the cost might have been incurred 50 years back. Cost might have been incurred 20 years back. So at that time the cost was very less, and if that same property is compulsorily acquired from you, offering you that cost is not going to happen. Always the authorities are going to offer the compensation which is near to that market value. Yes or no? And which will be definitely higher than the cost. If higher amount is received as a compensation against the cost which is lower, gain is arising. But this gain will be taxable under the head capital gain as per section 45(5). Because this is not a normal type of transfer, this is a special type of transfer. Is he transferring on his own? No. Government is taking a compulsory acquisition. And to charge tax on this gain arising on compulsory acquisition, first of all, compulsory acquisition is treated as your transfer. Definition of transfer also includes compulsory acquisition. So this is treated as your transfer. And any gain arising on this transfer will also be taxable under this head. In which year? In the year of transfer. In the year of transfer, meaning in the year of compulsory acquisition only this will be taxable. No, because this gain will not realize till the time he is not receiving the compensation. So this gain will be taxable in the year of compulsory acquisition, transfer. No, this will be taxable in the year in which either the initial compensation or any part thereof is received for the first time. Now how much was the initial compensation? The compensation which is initially fixed by the authority was 42 lakhs. Out of this, if 20 lakhs is received on 13th of December 2025, entire compensation or any part thereof is received for the first time, in that year the capital gain will be taxable. In that year the capital gain will be taxable. But to calculate that capital gain, what will be the full value of consideration? The compensation received plus the compensation receivable. Entire amount of initial compensation will be considered as your full value of consideration. Even if some consideration is receivable, because we are supposed to calculate the capital gain taking the full value of consideration. And how much was the full value? 20 lakhs or 42 lakhs? So 42 lakhs is the full value of consideration. Out of that 20 lakh is received right now, no? So entire gain will be taxable right now in this year. Balance 22 lakhs, whenever it will be received, at that time it will not be taxable. For example, the balance 22 lakhs is received in the next year. That time you ignore that 22 lakhs. Because that 22 lakhs plus 20 lakhs, entire 42 lakhs will be taxable in this year as your full value of consideration to calculate this capital gain. So are you an assessee? Tell me yes. Are you transferring any capital asset? No. You are not transferring. That capital asset is compulsorily acquired. So any gain on that compulsory acquisition will be taxable as your income under the capital gain head only. Because compulsory acquisition is a transfer, and any gain on this transfer also will be chargeable under the head capital gain. But we are not going to charge in the year of transfer, in the year of compulsory acquisition. We are going to charge the gain in the year in which initial compensation or any part thereof is received for the first time. So in my case, when it is received for the first time? 25-26. So in the year 25-26, the capital gain under section 45(5) will be chargeable to tax. But to calculate that capital gain, what full value of consideration you are going to take? 20 lakhs only, no? The amount of compensation received only, that much, no? Is it a full value of consideration or a part value? To calculate the capital gain, you are supposed to take the full value of consideration, meaning full amount of initial compensation, whether received or receivable. Entire amount you are going to consider right now. So, out of this initial compensation, the balance 22 lakhs is received in previous year 26-27. So it will be taxable in 26-27 also, no? Or that time it will be ignored. Because this entire 22 lakhs plus this 20 lakhs, this entire amount 42 lakhs will be considered as a full value of consideration right now to calculate your capital gain. Now tell me, name of the assessee. Status, individual ROR, PAN, dash, previous year. Why are you taking 25-26? Because the compulsory acquisition taking place in 25-26? No. The compensation or any part thereof is received for the first time in 25-26. Hence the capital gain is calculated and taxed in 25-26. Understood? Assessment here? 26-27. Computation of capital gain. Number 1, full value of consideration. In the bracket you will write full amount of initial compensation as per section 45,5 will be deemed to be your full value of consideration. So amount column, how much you are going to write? 42 lakhs minus transfer expense. See, at the time of compulsory acquisition, you will have to incur some expenditure on transferring the property on the name of authorities. Yes or no? So if any transfer expenses are actually incurred, you reduce those transfer expenses also. Yes or no? But in my example, have I taken any transfer expense? No. So nil. Net consideration 42 lakhs minus that will be 6 lakh. And if any cost of improvement is also incurred, for example, he incurred some cost of improvement amounting to rupees 1 lakh, amounting to rupees, and this cost of improvement was incurred in the year 1819. In which year? 1819. So this cost of improvement will also be reduced. But will you reduce with indexation or without indexation? Gain will be short term or long term, depends on the period of holding. So tell me, what will be the period of holding of this capital asset? It will start from date of acquisition till the date of compulsory acquisition, because this compulsory acquisition under any law is a transfer. So till this date only you are holding the capital asset, no? So your period of holding will be till 7th May. Because from 8th May, the property does not belong to you. Yes or no? It was compulsorily acquired. So what will be the period of holding? From the date of acquisition till the date immediately preceding to date of compulsory acquisition. This is your period of holding. Yes or no? So if on the basis of this period of holding you come to know that the asset is what? Short term. Period of holding is less than equal to 24 months. Then cost of acquisition, cost of improvement without indexation. Yes or no? And the resulting gain will be short term gain. But in my case, the period of holding is more than, then long term capital asset, long term gain will be calculated. But wait. Compulsory acquisition, meaning transfer, is taking place on 8th May 2024, meaning prior to 23rd July 2024. Now I will have to do the indexation also. Index cost of acquisition 6 lakh multiplied by CII. CII of which year? Year of compulsory acquisition, meaning year of transfer, which was 24-25. Yes or no? And divided by CII of 16-17. So 6 lakh into 363 divided by CII of 16-17 will be 264. You will get the index cost of acquisition. And will you index the cost of improvement also? Yes, 1 lakh into CII of 24-25. Yes or no? Which is 363 divided by CII of 18-19. 280. You will get index cost of improvement. Reduce that, you will get the capital gains. Understanding? Hello, sir. Now tell me, if I change this date a little bit, instead of 8th May 2024, I transfer on 8th August 2024, compulsory acquisition. So compulsory acquisition taking place on or after 23rd July 2024. No indexation will be given. Yes or no? Meaning this 6 lakh and this 1 lakh will be reduced without indexation. Understanding? Whatever gain will come, that is gain without indexation. On that, 12.5%. And since you are an individual, resident, hello, and immobile property is transferred on or after 23rd July 24, which was acquired prior to 23rd July, you will now calculate the capital gains with indexation. On that you will apply 20%, 12.5% or 20%, whichever is lower, that tax you are going to pay. So first, from this example, you are going to calculate capital gains. Calculate the capital gains and give me the answer first. Proper format. In the format you are going to do that. See, I am solving the questions only directly with you. Along with the concepts, we are doing the questions. Similar type of questions you are going to get. But in the examination, it will not be written like this. The examination, it will be in the paragraph form. But you are going to get these informations only. Okay, no? Done. Final answer. 32 lakhs. Very good. Everyone got that answer? Asasi, what are you doing? Just writing the question still. Asasi, you are individual now? Dash ROR. Pan dash. Previous year 25, 26. Assessment year 26, 27. Why are you writing previous year this? Because the year in which the compensation or any part thereof is received for the first time in 25, 26. So that is the year in which the capital gain will be calculated and charged to tax. Yes or no? Computation. Help me to solve this question. Computation of capital gains. Full value of consideration. In the bracket, whole amount. What did I say? Whole amount of initial compensation. That will be treated as your full value of consideration under section 45(5). So what was that amount? Did you see one thing that in the question, no, I have also written FMV. Am I using that FMV anywhere? So if the question also gives you this type of FMV, what are you going to do? Yes, deliberately that figure will be given in the question, just to confuse you. Simple thing, if you will remember, no, my asset is going. How much is coming? Asset is going. How much is coming? 50 lakhs is not coming, no? So why are you writing 50 lakhs? Why are you giving 50 lakhs? Whatever amount is coming will be my full value of consideration, and that amount is amount of initial compensation. Yes or no? So even if this 50 lakhs fair market value is given, it is irrelevant. Yes or no? This I just told you to give a reference. Okay. Now tell me, less what? Any transfer expense you have incurred? Sure. So this will be 42 lakhs. This will be your net consideration. minus index cost of acquisition, which is 6 lakhs into 363 divided by 260. Done? No? You have seen the CIF properly? Tell me. 8,25,000. Now minus index cost of improvement. Cost of improvement was incurred 1 lakh rupees into 363 divided by which year the improvement was done? 1819. So CI of 1819. 280. Tell me. $29,643. Everyone getting this? Reduce. 350. This is your taxable LTCG under section 112. Done, sir? On this, how much tax? 20%. Yes or no? Next one. Tell me one thing. If the same question, I change a little bit. Okay. So you are again going to do the same calculation. Okay, no? Why are you taking this long-term capital gain? Because the period of holding was from which date? 10th June 2016. 10th June 2016 to 8th May 2024, meaning 7th May 2024. This entire period of holding is more than 24 months. And you have taken the indexation also. So we will write indexation is considered since compulsory acquisition, that is transfer, is taking place on 8th May 2024, that is prior to 23rd July 24. If you will write a small note like this now, it will be very effective. In all the questions which we have solved now, you are supposed to write down the period of holding like this and a small note like this, whether you have taken indexation or not. If yes, then why? If no, then why not? Understood? Now, if in that same question, if in the above example, compulsory acquisition takes place on 18th December 2024 instead of 8th May 2024. Compute capital gains and also tax on such capital gains. Did you understand the question? In the information, no. Now I have changed this date. This. Instead of 8th May, it is 18th of December. Now, will it affect your calculation? Yes. Now, this 6 lakh will be taken and this 1 lakh will be taken, or your long-term gain will be without indexation. On that 12.5%. Yes or no? And again, you will recompute the gain by taking the indexation, which will be same only. Same. Even the index values will also be same. Yes or no? But on that you will apply? On that you will apply 20%. So 12.5% or 20%, whichever is lower, that will be the tax which you are going to pay. Done, sir? Calculate fast. Do the calculations fast. This part will be same, no? First 3 lines. It will be same. Then from this, less cost of acquisition, less cost of improvement. Cost of acquisition will be 6 lakhs. Cost of improvement will be 1 lakh. How much? This will be taxable LTCG under section 112, and this is without indexation. Okay. Why have you calculated LTCG? Period of holding starts from 10 June 2016 to 18th of December 2024, and this period of holding is greater than 24 months. Therefore, the gain is long-term gain. Yes or no? And no indexation in COA and COI since transfer on or after. Transfer means compulsory acquisition, on or after 23rd July 2024. This thing and this thing. Now on this, the tax has to be calculated at the rate of 12.5%. Calculate 4 lakh 37,000. Will you call this tax 1? This is your tax 1. Okay. Now you are going to calculate the LTCG. LTCG with indexation. Taxable LTCG with taxable LTCG under section 112. To calculate this, what am I going to do? Same thing. Copy paste. Minus index cost of acquisition, which will be 6 lakh, into CI of which year? Transfer year. Transfer is happening in December 24, means 24, 25. 363 divided by 260. Already we have done this already. Index cost of improvement 1 lakh into 363 divided by 280. We have already done this, no? Here, see, just copy paste. So your capital gain will be same. Only change the color. That's it. Color will be black color. Color, black color. Now, tax at the rate of 20%. How much will be that tax? 6,49,071. Can I say, even if your capital gain was less, see, here your capital gain was 35 lakhs. On that, tax at the rate of 12.5% will be this much. Yes or no? And here, even if your capital gain decreased, but since the rate is 20%, the tax is this much. Yes or no? So can I say this is your tax too? Therefore, tax on LTCG under section 112 is lower of tax 1 and tax 2, which is equal to 4,37,500. 4,37,500. Any other income? Calculate the tax. That tax plus this tax. Add both of them, you will get tax on total income. On that, if surcharge applicable, apply surcharge. Rebate applicable, reduce the rebate. Yes or no? Then add 4%. You will get gross tax liability minus TDS TCS minus advance tax minus AMT credit, if any, minus relief. You will get net tax liability or refund. But the capital gain, the tax will be calculated like this only. Understood? Easy? Why I am making you calculate this again and again? I am expecting, gut feeling. Before the break I have already told you, gut feeling. This is going to be asked in this time. Okay? Now, see, 45.5, did you understand? Everyone? In section 45.5, there is one more provision in section 45.5. 45.5 says that any profit or gain arising on compulsory acquisition will be taxable in the year of any capital gain on compulsory acquisition. On compulsory acquisition will be taxable in the year of compulsory acquisition, no? Or in the year in which the initial compensation is received. Now what if the government offered, Srikant, how much government offered you? Are you happy with this? So what are you going to do? You will file a case against the government authorities who have done the compulsory acquisition. Now Srikant will go to the court and he will ask the court, he will tell the court that court, my lord, your honor, please tell the authorities to increase my compensation. They have not given me fair amount of compensation. The market value of my property was way higher than the compensation which the government is offering. Government is offering only peanuts, 42 lakhs. Whereas the market value of my property is very high. The government has not given me fair amount of compensation. Please ask the government to give me fair amount of compensation, higher compensation. Now if the case is admitted in the court, now the court will do the hearings and all. Tell me yes or no. And after hearings are done, there will be a decision which the court will pass. What if the decision is passed against him? What the court will say? That no, Srikant, Whatever compensation the government has offered, that is okay. That is not reduced, okay? But according to us, whatever the government has offered, whatever the authorities have offered, that is okay. Be happy with that compensation. Then nothing doing. Then nothing doing. But what if the judgment comes in his favor? Possible. What judgment will come? Now the court will pass a final order. Court will pass a final order saying that the initial compensation should be increased to 55 lakhs. How much? Ayyo. So Shrikant is going to get 55 lakhs more. 55 lakhs more. Or initial compensation is enhanced. Initial compensation is enhanced to 55. So how much enhanced compensation, additional compensation he is going to get? 55 lakhs. Or 55 minus 42. Balance is 13 lakhs extra compensation the court has ordered. The court has ordered the authorities that make the compensation, make the initial compensation 55 and give the assessee enhanced compensation, additional compensation. Will the authorities or the government obey this order? Yes. Court's order, everyone has to obey. Yes or no? So now will the authorities or the government give extra compensation? Is it the income of Shrikant? Taxable? Under which head? Please think and then answer. Huh? Income from one tight slap. Even that will be taxable as your capital gain. Why, sir? Bloody your amount of initial compensation is only increased. If this 13 lakh would have been received as a part of your initial compensation where this was taxed, so now you will change the head. The head will remain same. Capital gains. So even this additional compensation, enhanced compensation of 13 lakhs will be taxable under the head capital gains. In which year? In which year this will be taxable? In the year in which the final judgment of the court is declared. So the year in which the court will declare the final judgment, in that year this 13 lakh is going to be taxed. But tax under which head? Capital gains. So you will take this 13 lakh under the capital gains head. Under the capital gains head. And in capital gains head, you will write down 13 lakhs. But remember, out of this additional or enhanced compensation, you will not get any deduction for cost of acquisition and cost of improvement. Why? Because at the time of calculating the capital gain, based on initial compensation, you have already taken the deduction of cost of acquisition and cost of improvement. So now your cost of acquisition, cost of improvement will become nil. But remember, you might have incurred some expenses to file the case and to fight the case. Yes or no? Those are known as legal expenses or litigation expenses. You are going to get the deduction for those litigation expenses. For example, 1 lakh rupees of litigation expense incurred. So 13 lakh minus cost of acquisition, cost of improvement nil, and minus litigation expense. How much? 12 lakhs. That 12 lakh will be taxable under the head capital gain. In the year in which the final judgment of the court is declared. Yes or no? So if the final judgment of the court was declared in 28-29, which year? So this 12 lakh will be taxable in 28-29. So first, the difference between initial compensation and enhanced compensation. What is the enhanced compensation? What is the court saying that how much compensation should be given? 55. 55 minus 42. Additional 13 lakhs. 13 lakh will be taxable in the year 28-29. Because in that year, the final judgment is declared. Yes or no? And 13 lakh minus cost of acquisition, cost of improvement, nil. But litigation expense, 1 lakh will be reduced. Yes or no? But wait, after reducing 1 lakh, 12 lakh gain will be taxable. How much gain will be taxable? Capital gain will show how much income? 12 lakh. Will you consider that as short-term gain or a long-term gain? Because that year under the head capital gains, you will have to show that this 12 lakh is your long-term gain or 12 lakh is your short-term gain. Which type of gain will be this? Apply common sense. Apply common sense, you will get the answer. If this amount would have been received as a part of initial compensation, this would have been taxed as. So right now also in the form of long term. So whatever will be the nature of your long term gain will be the nature of this 12 lakh also. Because if this amount would have been received at that time only as a part of your initial compensation, even this amount would have been taxed as your long term gain. So now also it will be taxable as long term gain. But what if the original capital gain which you have calculated based on initial compensation, what if that was short term? Then that 12 lakh will also be short term. So whatever will be the nature of your original gain, what did I say? Whatever will be the nature of your original gain calculated based on initial compensation, that same nature will be of that, the additional compensation. Will you remember this? Everyone? But wait, sometimes what happens, the court does not give a final order. A rough order is given. You maintain rough book, fair book. You jot down everything here, then at home, you fairly write everything. So that is your final notebook. Right now this is your rough notebook. So just like that, before giving the final judgment, even the court knows that final judgment is going to take so many years. So before that, let us pass a interim judgment. This is a judgment which is a temporary judgment. And this judgment can be changed also later on, yes or no? So when the proceedings will be finalized at the time of final judgment, this judgment can be changed also, yes or no? So that judgment which is declared as a temporary judgment before the final judgment is coming, that is known as interim judgment. Which judgment? Now for example, in the interim judgment, if the court says that the compensation should be enhanced. So your compensation is enhanced because of final judgment or because of interim judgment? That will not be taxable on receipt basis. And as a result of interim judgment, you are getting additional compensation, yes or no? So that 13 lakhs you are receiving as a result of final judgment? No. That 13 lakh you are receiving as a result of interim judgment will not be taxable on receipt basis. No. It will be taxable when the final order will be declared. Because if it is taxable on receipt basis, what will happen? Later on the court reverses the judgment and you have to pay that 13 lakh back to the authorities. That time you will have to get involved into refund and all. Because right now this 13 lakh will be taxed on what basis? Receipt basis. You have already paid tax on receipt basis, yes or no? And later on, what if the court says that no, 13 lakh should not be increased, give that 13 lakh back to the authority. Now bloody first you will have to give that 13 lakh to the authorities also, and on that 13 lakh you have already paid tax, and that tax also you are supposed to take as a refund. So that will unnecessarily put the assessee in the trouble, and also the department will also have to pay the interest on that tax refund. So extra outflow will happen from the department side also. So do one thing. The law says that whenever the final judgment is declared, and because of final judgment, if the compensation is enhanced, so that additional compensation will be taxable in the year in which the final judgment is declared. But if the compensation is enhanced because of interim judgment, it will not be taxable on receipt basis. It will not be taxable on. Its taxability will be done in the year in which the final judgment is declared. For example, you have filed a case. Shrikant has filed a case right now to get the compensation enhanced. So court said that see, we are giving an interim judgment right now. That compensation should be enhanced to 55 lakhs. So right now we are directing the authorities to give how much? 13 lakh rupees additional compensation to Shrikant. But this judgment can be altered later on, yes or no? Based on the court proceedings. Whenever the final judgment will be there, that final judgment will be binding on both. Understanding? So what if the final judgment is, so right now if this 13 lakh is received, minus the litigation expense 1 lakh, 12 lakh. Right now it will not be taxable on receipt basis. The taxability will happen in the year of declaration of final judgment. For example, final judgment is declared after few years. And at that time, if it was decided that no, okay, the assessee should get 13 lakhs. Then no problem, 13 lakh minus cost of acquisition nil, cost of improvement nil, minus litigation expenses 1 lakh, 12 lakh will be taxable in that year. Understanding? But what if the court gives the judgment? No, not a single rupee should be given as an additional compensation. Return that entire 13 lakh. Return that entire 13 lakh. No need to pay any tax. So first you received 13 lakhs. At that time you did not pay tax. And later on you came to know that 13 lakhs should not be received. So the court gave the final order that 13 lakhs should be refunded to the government or to the authorities. So you refund that 13 lakhs. And that is not your income. No need to pay any tax. The things are more simpler. And what if the final judgment comes and in that final judgment if the court says no. Additional compensation should not be 13 lakhs. Additional compensation should be 15 lakhs. How much? Out of that 13 you have received right now, 2 more you will receive. So how much? 15. Entire 15 will be taxable at that time. Understanding? So things becomes more easier. What if the court gives the final judgment that no, 13 lakhs should not be given, only 6 lakhs should be given. Return that 7 lakhs. So you'll return that 7 lakhs and you'll calculate capital gains based on 6 lakhs. On that only you will pay tax. Understood? What if the question is silent, that which type of judgment is this? You will always assume that it is a final judgment till the time the question is not telling you anything. But if the question tells you that the additional or enhanced compensation is given based on interim judgment, then it will not be taxable on receipt basis. It will be taxable in the year in which the final judgment is declared. Will you remember? Sure. So now in the same question, I am giving one more information. Okay? Pay attention. If in the above question, if in the above example, Mr. Shrikant was not happy with the initial compensation, he filed a case against the authorities in the court to get the compensation enhanced. Court directed the authority to pay enhanced compensation of rupees of 55 lakhs in previous year 27-28. Litigation expenses incurred by Mr. Shrikant was rupees 1 lakhs. Discuss the tax effects. Discuss the tax effect. Write down this, then I am dictating that tax effect. Write down. Amount of enhanced compensation amount of enhanced compensation in the bracket as per final order of the court, because since nothing is mentioned in the question, we will always assume that this was the final order. Yes or no? So as per the final order of the court, okay, is how much? 55 lakhs minus initial compensation which was already given will not be again given, no? So minus 42 lakhs. How much? 13 lakhs. This 13 lakh is known as additional or enhanced compensation. Okay. Minus cost of acquisition and cost of improvement, which is equal to nil. You have to always take it nil. Yes or no? Minus litigation expenses incurred by assessee. That was 1 lakh. Balance is 12 lakhs. Now this 12 lakhs, what will be the nature of this gain? This is also long-term capital gain, taxable long-term capital gain under section 112. Why long-term only? Since original capital gain based on initial compensation was also long-term capital gain. Yes or no? Now this 12 lakh will be taxable in which previous year? In previous year 27-28, that is year of final judgment of the court. In that year it will be taxable under the head capital gain, and the nature will be same as that of original capital gain. Yes or no? Taxable in the previous year 27-28, that is the year of final judgment, and you will get the deduction for litigation expense, but cost of acquisition and cost of improvement will be taken as nil. Done? These things you are supposed to remember. Done, sir? Now if this judgment was interim judgment, then no need to calculate this. You will write down that since the additional compensation is based on interim judgment, it will not be taxable in the year of receipt. However, its taxability will be decided in the year of receipt of final judgment. Full stop. Understood? But since it was not mentioned in the question that it was a final judgment or interim judgment, it is always considered as final judgment. If interim judgment will be there, they will be specifically mentioned in the question. Understood? Sure, sir? So this is your 45.5 comes to an end. Okay. Now one simple, very easy exemption is there. See, there is one section, section 10 subsection 37. Which section? 1037, which says that if you are an individual or HUF, okay, you are having urban agricultural land. Which land, sir? Urban agricultural land. And this urban agricultural land was compulsorily acquired under any law. So on the compulsory acquisition, see, this is urban agricultural land is a capital asset, no? And this is a capital asset. Compulsory acquisition under any law is a transfer also. Yes or no? So on this type of transfer, usually you calculate what? Long-term capital gain or short-term capital gain is calculated under section 45(5). So usually on compulsory acquisition of a capital asset under any law, the capital gain is calculated under section 45(5), and that capital gain can be short-term capital gain or that can be long-term capital gain also. Yes or no? This entire capital gain will be fully exempt under section 10 subsection 37. So no need to calculate also, because even if you will calculate, the amount has to be exempt. So in this case, don't calculate capital gain under section 45(5), because even if you will calculate the capital gain on this compulsory acquisition, this has to be exempt. So no need to calculate. Whether the short-term gain is there, long-term gain is there, this will be fully exempt. No need to calculate. But this will be exempt only if this urban agricultural land was used for. Used for what? Agricultural purpose for at least 2 years. At least immediately prior to its compulsory acquisition. So whenever the compulsory acquisition is taking place, immediately prior to that, for minimum 2 years, it was used for agricultural purpose. And on this compulsory acquisition, whatever compensation is to be given, yes or no, that compensation is approved or decided. Can I say that compensation is decided by the central government or RBI. So on the compulsory acquisition of a capital asset, which capital asset? Urban agricultural land. First of all, there is a specific asset. Any capital asset or only urban agricultural land? Urban agricultural land sold. If sale will happen, capital gain will be taxable. Ayo. So urban agricultural land is not sold. Compulsory acquisition is taking place. Any type of transfer? No. Specific type of transfer. Any capital asset? No. Specific capital asset. Which capital asset? Only urban agricultural land. Any type of transfer? No. Only compulsory acquisition. And on this compulsory acquisition, you should have calculated capital gain under section 45(5). That capital gain should have been short term or long term. Don't calculate that capital gain only. Because whatever capital gain you are going to calculate, whether short term or long term, will be fully exempt under section 1037. Why? Because the urban agricultural land which is getting compulsorily acquired was used by the assessee for agricultural purpose for at least immediately prior to its compulsory acquisition. And the compensation on compulsory acquisition is decided by whom? CG or RBI. If all these conditions are fulfilled, then the capital gain will be fully exempt. No need to calculate. But remember, this is exempt only if you are. What if it is a company? Always the capital gain will be calculated. What if it is a partnership firm? Always the capital gain will be calculated and will be taxable. The capital gain will be exempt only if the assessee is which type of asset? Which type of transfer? Immediately prior to compulsory acquisition, it was used for at least 2 years for, and the compensation for this compulsory acquisition is decided by CG or RBI. Yes or no? Then on this compulsory acquisition, capital gain under section 45(5), whether short term or long term, will be fully. So will you calculate that capital gain? Or no need to calculate also? Because bloody if you will calculate also, what will happen? It will be fully exempt. You have to take it nil only. Then why are you doing a hard work of calculating that? Don't calculate only. Understood? So this is the end of 45.5. All the specific charge over. 3 sections were there. Okay. This consumed today's entire lecture. Just imagine 2 sessions. Now all the sections are small sections. We'll complete them fast. Okay. Now see. Now section 46 is remaining. Which section? Usually I cover this section 46 with specific charge only. So specific charge, only 3 sections are supposed to be done at CA intermediate. 45.1a, 45.2, 45.5. These 3 sections we have completed. But along with this, I also cover 46 and 46a. 2 more sections are to be completed. Okay. Then the part 2 of the chapter will be over. Then we'll move on to the next part. Very important part. Special aspects. In this special situation, how will you calculate capital gain? What cost you will take? What FVC you will take? What will be the period of holding? Okay, no, special situations, how to calculate capital gain. So the manner of calculating the capital gain in special situations will be discussed in those special aspects. Understanding? And once that is over, understand the entire chapter is over. Because only then, what will remain? Exemptions. Section 54 to 54F. That is there in your syllabus. And the last part of the chapter? Tax rates. YKT. You know that because while discussing so many provisions so far, we have discussed the tax rates also. So that will be just a formality which I will be completing by writing the tax rates, so that you go through those tax rates and few small things which you are supposed to keep in mind while applying those tax rates. Yes or no? So tomorrow we'll try best to finish this entire chapter. But if some part will remain, that will go on day after tomorrow, and day after tomorrow, the moment this chapter will be over, all the chapters which are remaining, then within one day we'll finish two chapters. All the chapters are very small chapters. Deductions will take one session, full session. Okay, no, deductions and computation of total income will take one full session. Okay, because in that deductions under chapter 6a, we have to do lot many discussion also. We have to solve computation of total income questions also along with that. Yes or no? Then all the chapters which are remaining, very small chapters are there. Hardly some chapter will take 2 hours, some chapters will take 3 hours, 2 hours, 3 hours. The chapter will get over. Okay. But now whatever chapters are going to start are all those chapters which are confirmed there in the exam, but they are coming for cash marks. Either a 4-mark confirmed question will be there from that chapter. And if you will miss all those chapters, forget about passing in the exam. Your entire syllabus is important, but small chapters you read less and you get confirmed question, and that confirmed question also you can score full marks. Then why to leave those cash marks? Understanding what I am trying to tell you. So now see what is the plan. We'll take a small break. After the break we'll complete section 46 and 46a. 2 sections we are going to complete. Okay. Now once those two sections are completed, okay, then we'll move on to the third part of the chapter. Okay. But before that, tell me one simple thing. Have you done 45.1? 45.1 is what? General charge. General charge. Have you done 45.1a? Specific charge. Have you done 45.2? That is also a specific charge. Have you done 45.5? That is also a. Now you are going to tell me. Okay. Number 1, here the profit and gain arising on what? Transfer of capital asset. So this profit or gain will be taxable. Will be taxable. Taxable in which previous year? Taxable in previous year in which capital asset is transferred. Yes or no? What will be the full value of consideration? Amount of actual consideration. Full or whole amount of actual consideration. Yes or no? So there is no deemed consideration over here. There is actual consideration. Yes or no? So you are going to take, usually you are going to take actual consideration, which we have already seen. Okay? Period of holding starting from the date of acquisition, ending on date immediately preceding to date of transfer. Asset is short term, cost of acquisition, cost of improvement, no indexation. Asset is long term, but transfer was prior to 23rd July, then indexation is also there. If the transfer was on or after 23rd July, indexation will not be available. Yes or no? So any profit or gain arising on transfer of a capital asset will be taxable in the previous year in which capital asset is transferred. But to calculate that profit or gain, to calculate this profit or gain, what will be the full value of consideration? Actual consideration. Understanding? Now tell me 45(1)(a). Which type of profit or gain? Profit and gain arising on what? On receipt. Receipt of what? Insurance claim. Insurance claim on damage or destruction of what? Capital asset due to NRFE. So any profit or gain arising on receipt of what? Insurance claim due to damage or destruction of your damage or destruction of your capital asset due to NRFE. This profit or gain will be taxable under the head. This will be taxable under the head PGBP, but it will be taxable in which previous year? In previous year in which the capital asset is damaged or destroyed, or in which the insurance claim is received. So previous year in which insurance claim is what? Received. In that year this gain will be taxable. But to calculate this gain, full value of consideration, what are you going to take? Amount of insurance claim will be taken as full value of. So this profit or gain which is getting taxable under section 45(1)(a), this will be taxable based on this full value of consideration. Done, sir? So while calculating this gain, take this amount as full value of consideration. But while you are calculating gain under section 45(1)(a), then what will be the full value of consideration? Actual consideration. The amount of actual consideration. Yes or no? Now let's talk about 45(2). 45(2) talks about profit and gain arising on what? On conversion of capital asset into stock in trade. So this profit or gain will be taxable. Will be taxable in which year? Taxable in the previous year in which the conversion transfer is taking place, no? Or that converted stock in trade is sold. So the year in which the conversion is taking place is the year of transfer. In that year the gain will not be taxable. It will be taxable in the year in which the converted stock in trade is sold. Yes or no? So previous year in which converted stock in trade is sold. Now to calculate that capital gain, what will be the full value of consideration? The fair market value of the asset, of the capital asset as on the date of its conversion into stock in trade. So fair market value as on date of conversion take this amount as full value of consideration to calculate this profit or gain, and this profit or gain will be taxable in the year of conversion. No, 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 no. Sale of stock in trade. Understood? Next one, 45(5). Just now we have concluded this. Any profit and gain arising on compulsory acquisition of capital asset under any law, this will be taxable in which previous year? In previous year in which the capital asset is compulsorily acquired? Transferred? No. In which initial compensation or part thereof is received for the first time. Done, sir? And to calculate this, what will be your full value of consideration? Full amount of initial compensation will be deemed to be your full value of consideration. Yes or no? And along with this, one more amount will be taxable under 45(5). And additional or enhanced compensation will also be taxable under the head capital gain under section 45(5). But this will be taxable. In which previous year? In previous year in which final judgment or final order of court is declared. But whenever this will be taxable, okay, no, this will be taxable under the head capital gains, and the nature is same as that of original capital gain computed based on initial compensation. Do you remember this? Cost of acquisition, cost of improvement will be taken as nil, and litigation expenses will be allowed as a deduction. That's it. Color, purple color. Purple is there, no? The same for you. So will you remember all these things? This is something which we have completed. So period of holding here, period of holding here, period of holding here, from which date to which date. Understanding or not? Then what will be the period of holding here? Period of holding in case of asset compulsorily acquired, from the date of acquisition till the date immediately preceding to date of compulsory acquisition. That will be the period of holding. Period of holding in the case of conversion, date of acquisition of the capital asset till the date immediately preceding to date of conversion. Period of holding in the case of assets damaged and destroyed, insurance claim is received. Date of acquisition of the capital asset till date immediately preceding to date of damage or destruction. That will be the period of holding. And based on that period of holding, asset will be short term or long term. Gain will be short term or long term. Indexation might come, indexation might not come. Understanding? Done? So this is the end. We'll take a small break of 1 hour and then we are meeting and we'll continue from here.